this stuff right here. Record it. All right. Okay. In the tax world, remember two things. There's the working man class tax, and then there's the rich man tax. Okay? And so, once you understand these two concepts, then it starts making more sense why you do certain things a certain way. Our job is to make sure that our regular people get treated like rich people. So, we call the working man class the income tax rate, and we call this the capital gains tax. All right, so in order, when you have somebody come in and they're talking to you and they say, okay, how should I set up the business? Well, you just want to make the understanding is this person working this business, or are they doing it for investment purposes? So investment purposes would be real estate. They're buying a house to rent out to other people. That you want to put onto this side. Because, like I said earlier, this is a rich man's tax. When something's in this bucket over here, yes, if they have gains, they have to pay, I think it was 25% now?
Something like that, yeah.
Yeah, they moved it from 20 to 25. But rich people don't ever try to realize gains. They do 1041 exchanges, and they commonly just keep the money in the same asset, and they just keep rolling it over and rolling over and rolling over. So anything over here, we immediately know, is it an investment? If it's an investment, we do not want to elect S Corp status. We want to just tax it as a sole proprietor. Okay, so the IRS does not recognize LLCs. To the IRS, LLCs don't exist. You have to elect a tax status. And so on this side, when we come to income tax, if people just don't know what they're doing and then they set up their own business and they don't set up as an S Corp, which at the beginning might be the best idea. So this kind of comes into planning with somebody. You know, someone might come in with all their aspirations in the world that they're going to start this business and they're going to make a ton of money, but they don't understand. And I go, okay, well, if you're going to work this business, we're going to want to set up an S Corp. The problem is when you set up an S Corp, they have to do their payroll taxes and they have to do their quarterly filings. And that kind of gets expensive at the very beginning when you don't have any income coming in. So that's the first thing I'm trying to figure out. Do they actually have income coming in to justify setting up the S Corp? Or should we kick it down the road like 6 months and go wait till you have income coming in, then we'll set up the S Corp? But this is how basically everybody, or how regular people that are running their business get screwed over. So real estate agents are the worst at this. Real estate agents, they just start buying and selling houses and they don't think anything of taxes. They can't understand why they're paying so much in taxes. And that's because, as you know, there's a thing that we refer to as you have your self-employment tax when you're self-employed. And you remember how much that is from tax school, or from law school?
Not from law school, but I was just looking at it today, and I think it's around 15%.
Yeah, it's I think it's it's.
What I read might have been wrong, but
is it 15.3%?
Something around 15.
Yeah, it's like 15.3%. Most people who are like employees don't understand this because their employer is paying half of that. Okay, so when you're an employee for a corporation, you have to, that 15.3% is being paid. Half of it by your employer, half of it by you. And that's for your Medicare and Social Security, allegedly. Really, it's been siphoned off to the military and it's no longer in the pot. But the lie to us is that someday that's going to be there for us. Okay? So, in this situation, let's say you're a real estate agent and you just go out and you're like, I'm just going to start buying and selling houses. Well, they have to pay that 15.3%, but it's not being taken out of their check. So they don't think to themselves, I have this 15.3% that I'm supposed to be taking out of this check. They wait to the end of the year and then they're ending up doing it. So then they get hit with that plus their income tax. So they got this plus the income. And then so let's say they just have an effective income tax rate of 20%. They didn't make that much that year. They're still paying at the end of the year 35.3% in taxes. And most of them haven't saved for that. And so they're screwed. You know, taking, you know, if you made $100,000 and then all of a sudden at the end of the year you have to write a $35,000 check, you're just like, well, I didn't prepare for that at all. So it screws people over when they're running their own business, and real estate agents run into this problem all the time. So how does the S Corp kind of help out? Well, the S Corp can take it, oh, I need to get my, instead of having every penny that you earn fall into the self-employment, let's say that same real estate agent said, you know what, I do anywhere from $100,000 a year. Sometimes I do $50,000. Sometimes I do $200,000. It just bounces up and down like crazy. But I'm just going to say, I'm going to elect S Corp status. I'm going to do my payroll every month so I don't get hit with that huge tax, because that's one psychological thing, is not being hit by the huge tax. So I'm going to have it just taken out. But for the biggest thing for me is I'm going to only say my income is $50,000 a year. Okay? So they're taking that $50,000 in our example before. We're saying you made $100,000 that year. Okay? So the other $50,000 is going to go over in this bucket. Okay, so that $50,000 that you're taking as a salary, that is what you have to pay. And they don't call it self-employment when you do it this way. When you're doing an S Corp, right here, you call it a salary, they call it FICA, your FICA tax. So now you're still paying 15.3% because you're the employer and the employee, okay? So you're still paying the same 15.3%, but on $50,000, not $100,000. So for every $10,000 that they do this, they're saving $1,500. Or if you want to put that's like an iPhone. You know, at the end of the year, that's 5 iPhones they could have bought. So you got it over here. Now we get paid. Now we have to pay our income tax. You have to pay the income tax though on the whole amount. Okay, so that all this comes back in for the income tax. So it's really only saving you on this FICA. Okay, but still in this situation, that's $7,000. Right? Did I do my math right?
Sounds right, but
Yeah, somewhere around there.
Mhm.
Yeah, I mean, I'll take an extra $7,000 just because if I now, how does the IRS, if you get audited, how are they going to look at this? Well, problem number one, it has to be reasonable salary. Okay, if you bring in $300,000 every year, consistently $300,000 every year, and you're paying yourself $50,000 salary, that's not reasonable. You're worth much more than $50,000. You know, you could start someone off this way if it's like, yeah, I don't know what the future is going to bring, but they got to up their salary every year if they're bringing in that type of money. So that's one thing you have to kind of be like, you can't just name it. If you could do that, people would just say $5 and then pay their FICA tax for $5, and then the rest they would take and they would save themselves $1,000 and they would cheat the whole system. So of course it has to be reasonable based upon history. So if someone comes in and they're telling me I make $500,000 a year, I want to do this strategy, I'm going to tell them no, it's not going to work because you have to pay. Because remember, the FICA tax goes up to, I don't remember how much it is, $150,000? Does that sound right?
I'm not sure.
I can't remember the exact amount. It goes up every year, but it doesn't go unlimited. You're not paying, FICA tax. We're not going to collect money on rich people. this is the focus on poor people having to pay that 15.3%. That's what we want, and that's what we're focusing on. So, this doesn't work with people who make high amount of money, but it does work for the tradesmen, there's the regular people that come in and go, hey, I run this business, I run a trade, or something like that. Those guys are the ones that get jacked over every year, because they go in and they don't elect S corp status, and they just do their sole proprietorship, and at the end of every year they owe so much taxes. Most of those guys fall so far behind that they usually have given up, and the IRS is constantly harassing them, and they've just kind of given up on life because they don't want to deal with it because it's too complex to understand. So you can save people a ton of money, especially when, like a welder that's an independent contractor. Some guy that is making around $100,000 a year comes in. This is where we can really, really help them. Is go, okay, what can we break this out to a reasonable amount? I can save you $7,000 a year if you just structure this right. Can't go back in time and do this, but going forward you can do this. And that's kind of the hard thing, is because a lot of people, they don't look into the future. They just like, well, what can you do for me back in the day? I want what happened before. It's like, well, we can't do this strategy. So that's why you elect S corp status. But once again, it's that range. I think it's somewhere around 150. It might be a little below that, but after that, you're not paying FICA tax anymore. Anything over that. So I think there is a little bit of savings, because when they did the Obamacare tax, I think that's like 2% or something, or like 1% or something. I don't quote me on that. It's been so long since I've looked at it, I don't remember. But anyway, these are the two general idea. Investments, are they just using this for investment purposes? We're going to keep it over here. The LLCs with the S corp are over here. But it's really that sweet spot. Are we in that sweet spot? Can this guy legitimately bring it down? Like, I don't even bring this up. If a guy comes in and he's making like 190 every year consistently, I'm like, I'm not going to even bring this up to this guy, because he's going to go, I can do this, because I start getting into that. Well, I'm just encouraging this guy by giving him this information to commit tax fraud. It's kind of like not worth it. Okay, it's not worth me getting the IRS, coming after me, or you getting pissed off 10 years from now because I told you this, and you said, you told me to do this, and it's like, no, I would not tell you to do something like this. I would have told you, for the last 10 years, you've made over $190,000, your salary is around $190, but that's the breakout. It's funny because I have a good friend, he's a financial advisor, he didn't understand this, and he was just running his business as a sole proprietorship for like a decade.
Wow.
And he was making around $100,000 every year. That was kind of his thing for a long time. And he's like trying to calculate out, like, it was like over $100,000 he would have saved himself if he would have just structured as an S corp from the beginning.
Wow.
When you realize you lost $100,000 because you just didn't pay attention in your financial advising class one day. That's a huge, huge hit.
Yeah. Okay, so what, in this case, what makes that $50,000 reasonable if it's only like half of what the business made?
History.
Okay.
You got to go back and, well, they don't have any history. You can start lower. Because, your first year, you have no idea. So if I have someone starting off, and they're kind of, I'm starting that off, as low as, okay, minimum wage. What would minimum wage be, full-time employee?
Okay, so as long as it could be a wage.
Yeah.
For someone, it could be that low, but then history, once you have several years, or like even a year, would that be history? Or?
You got a year, you got something to look at, but you got to understand the hard thing is, and most people who own their own business, it isn't, they're not employees. Their income isn't like that every year, or like an employee is like this, they start and they go like slowly gradual over time and they get more and more and more. Mm-hmm. This is a person that runs their business. That's how they go.
Yeah.
And this is what this collapses so many business. They think, next year I'm not going to have this year. I'm going to have this year next year, and so they spend all their money. I won't worry about the FICA. That's the other great thing about the S corp, and why sometimes you just tell people straight up to just do it. Start pulling out your taxes every month. You don't have to worry about that 15.3% at the end of the year, so you haven't been like sitting there going, oh, I got money here. And then you have your income tax pulled out too at the same time. So that's why we like use Gusto, or you can QuickBooks Payroll. For like $20 a month, they'll do everything for you. They'll file your quarterly tax report. That's another thing that they're saying. Oh, you want to do this yourself? You have to file a quarterly tax report. You know, when I started, I used a guy down the hall to do this, and he screwed it up constantly because apparently you don't have to really understand math to get an accounting degree. But he could never calculate it right. Started taking my money, didn't pay the taxes. Let's see, what else did he do? He did file the quarterly things. It was like 2 years, and we finally realized, okay, probably shouldn't use a guy that's, you know, Trinity, I love God, accounting, you know, as your accountant.
Yeah.
You know,
yeah.
that's usually a bad idea. So instead, what I ended up doing was I moved everything over. I think that was the point. I was like, I'm going to go use an online company, Gusto.com, and just do it. Well, 2 years later, Cindy, sitting in the office where I'm at court, and two guys with cowboy hats and guns show up and go, "Where's Taylor?" And she's like, he's at court right now. And they're like, well, he has stolen, you know, payroll tax money. When you know how Cindy like keeps track of every little thing. She had kept track of every single thing that we had like signed and everything. So she had evidence showing that we had paid the check to this guy, that we had done all this stuff, and they didn't arrest me, luckily, because we had the evidence. But I ended up, I think it was something like, after penalties and the taxes and everything, it was like $60,000.
Wow.
You know, and it was like, I got to come up with $60,000 because this guy didn't pay my payroll tax. Because it doesn't matter. They don't care. That's why you just use an online company. Mm-hmm. You do not use some guy down the hall to do this. Wow. But that was my mistake. I thought, oh, you know, he's good to trust to do it. But yeah, this is, I tell people, just go get Gusto.com, go get payroll or QuickBooks, use our payroll system. Yeah. There's so many out there. If they screw up, they'll be responsible. Mm-hmm. And they are huge corporations that have a ton of money to pay the penalties.
Yeah.
All right?
Okay.
Makes sense?
Makes sense. Yes. Do you think you could send me that video?
Absolutely.
Or would it be...
Absolutely.